on the Zanzibar point, Zanzibar town. We're near Stone Town, and this is behind me is the port and boats, ferries, tourist boats. Well, hi folks, I'm here in Zanzibar, and as I promised, I'm going to go through the charts. This video is not going to be edited, so it's going to be choppy and scratchy and a little bit messy and perhaps a little bit echoey. So please forgive me for that. If you don't like the echoes, you shouldn't watch this video. Let's go through some of these currencies first of all, and let's just go through what we've got. And the first thing that's important on here to sort of consider is the dollar yen, because this is the one that's moved dramatically. The euro hasn't moved much. We sort of bit of pull off in the dollar index last week with all sorts of news coming out from Jay Powell. And I think the most important thing was that he said we're probably or maybe going to cut rates in September, but it's dependent on the data still. And the data that he was talking about specifically, and he mentioned it by name, was the jobs data. And he said if we see that getting out of control, then they'll be more inclined to cut than less inclined to cut. We then had the NFP jobs report on Friday, which came in just over 100,000, well below the 200 sort of expected number, 180, 200, and well below what we've been getting. So there is pressure on the jobs situation. The unemployment rate went up, and we're now approaching a situation where jobs are becoming a problem, or potentially becoming a problem, and the Fed is probably going to act. So that caused all sorts of fluctuation in the market last week. We saw the euro moving, we saw the dollar index generally. We also saw the dollar yen moving, but we saw moves on Bitcoin, on stocks, dramatic moves up and down on stocks one way and then the other, trapping the bulls, then trapping the bears, and then trapping the bulls again, and so on. We've seen Bitcoin coming off a lot, and we've seen some movement in commodities. And the one that you'll be most interested in that actually is probably looking pretty good is natural gas. So let's talk about all of those. I'm going to try and cover everything in about 10 minutes, make this video a little bit shorter so that you don't have to wade through this echoey and patchy video. This is the dollar yen, and you can see we've moved down into the support block. This is the day chart on the dollar yen. We've moved down from 162 to 146 and a bit. So yeah, that's a long way. Sorry, 162. So that's 1,600 pips. And basically, it's not as dramatic as it sounds because we're trading at 160 to 150. So these are not massive moves, but they are significant. We've also broken down through the bottom of this channel and through all the moving averages. We've got a 20 crossing over the 50. Some might call that a baby golden cross. 20 crossing the 50, 20 trying to cross the 100 too. By tomorrow morning or tonight, the 100 will be defeated by the 20. This is generally very bearish, but we've got a big bounce coming up, probably because we've moved so far so quickly, incredibly oversold. But we have broken all the support levels, the key ones, the moving averages and so on, and the channel line and this previous all-time high, or not all-time high, recent high at 151, 150. That used to be the Japanese line in the sand. After that was broken up, we've got this, what looks like now, a false break above 150, a collapse, dramatic collapse back down into the support block down here, this order zone, and we've got various other levels below us. I'm aiming for about 130, 128, maybe 126, all the way down into this block here. You'd need to look at this on the weekly chart to get a bit more of a perspective on that. There's the 1 week move that we've just been talking about, that huge candle, 1 week from 155 to 146, 900 pips in a week. Very dramatic. We've seen it before though. Look to the left. You can see this has happened often, not often, but on occasion. At least in this last year or two, we've seen it happen now 3 times. On this weekly chart, there's the 100-period moving average and the 786 Fibonacci. That's going to be the key level. I think we might actually even get down there first before a rebound. We've exited our short positions now and waiting for that rebound to resell. The resell level will be around about 150 and maybe slightly higher, just to trick and defeat those who start selling with vigor at 150. We may have to get up to 154 or 155. Now my screen's gone blank because the internet's not great. Nevertheless, we'll be patient. This is Zanzibar, and it's on the east coast of Africa. So that's where we go. Look where the 200 period moving average is at 129. We're aiming for down somewhere in that region, and we could even get lower, much, much lower, if things work out that way, depending on how the bond market goes and what the Fed is up to regarding all sorts of strange things that we don't have time to talk about. I will talk about in next week's videos. So that's the dollar yen. We're not trading the euro or the pound. The dollar index, again, like the dollar yen, and also the 10-year yield fell through the floor. There's the long-term trend line going up. This is a daily chart in the dollar index. We broke down through that support block. Yeah, so major structural break or something along those lines, basically breaking support down through this channel line, trend line, and heading down. I continue to think that the dollar is likely to trade in a broad range for the next period or so, next year maybe towards the end of this year. Please forgive the occasional blackouts of the screen due to the internet. Let's go straight to natural gas, and we'll come back and circle back to some of the other things. Here's natural gas on Friday. All I want to say is that this level has actually still held. This very key support level that we tried to defeat on Friday, held above it so many times on the 15-minute chart. You'll see these constant spikes down and pushes back up, and eventually we managed to get going a little bit and then collapsed back down on Friday. This is the 4-hour chart, and then bounced up sharply above this pattern. This pattern that you see here is a broadening pattern. It's a regular broadening pattern. It's a reversal pattern. It's taking place at the bottom of a long-term downtrend, on the short-term charts rather, that is, I should say. But on the day chart, let's actually use the same chart. On the day chart, there's a sort of medium swing down, nothing dramatic, back down to the dollar store level, the $2 level, just below. Big bounce off that broadening pattern. We've got to get back through these moving averages. This is the day chart, and this is the Pepperstone spot price. We'll have a look at the Henry Hub very briefly after this. We've got to get out of this broadening pattern, bearing in mind that if we move to the top of the broadening pattern, that will only take us to the top of this, the center of this previous channel, and just above or around this pink zone here at about 217. That will be our first target, 217 to 225. Call it a sort of a 10-cent range, 215 to 225. And if we can push up through there next week, going into the season where there should be a bit more demand on natural gas, both storage and supply and demand, etc., all of those things, well, the two things really, are showing a propensity to swing to the long side. So I'm still pretty optimistic on this. On the 4-hour chart, it looks good. On the day chart, it looks good. I'm still waiting to add another long position to this. And I was hoping, let's go back to the day chart, that we'd get all the way down into, sort of down into this messy, choppy zone here at around 170, 1.7, $1.70, somewhere around there. But we didn't get there. Now let's go have a look at the Henry Hub day chart. And that's this chart at the top right here. And basically, it's showing the same thing. The futures price is very similar to the spot price over at Pepperstone now. We're trading at 196.30 on the futures. That's the front month futures, and we're trading at 198, 198.30. So just a tiny little bit higher on the spot price. So the futures seem to have they're trying to make a bottom here. The spot price is trying to make a bottom, and it all looks good. If we do get a move down into this order block, into this support zone here, this messy, choppy zone, that's actually the place I'd really like to buy more natural gas than currently where we are at the moment. I'm not 100% convinced that this support is going to hold. And in fact, personally, I prefer it not to hold so we could pick up a little bit more later on down in slightly lower levels into the 17s, 18s. However, I do know there are a lot of people who are relying on the price to move up next week and hopefully gap up this weekend and move them out of trouble. I'm very aware that there are quite a lot of traders who have over-leveraged and over-committed at higher prices and are struggling to hold onto those positions and onto those trades, and some even onto their accounts at this level. And so I'm going to wish, along with you, that this will move up and forego my additional add position a little bit lower down. If we move up, I'll be just as happy due to that and because of that. Now, a couple of other things on this chart. We're short on WTI oil. Similar to Brent crude, moving in the same way. What's interesting is Brent crude peaked through or dipped. Let's have a look at Brent crude first, because this chart often gives you a lot of good clues about WTI. If you're not sure about WTI, have a look at your Brent crude price chart. I've got these both running on BlackBull. and have a look at, see what Brent crude's doing. This tends to offer a few more clues. This has touched support and bounced back. There's a little bit further support down here at about $76 to $77, and we are at this double bottom support. Now, when we go across to WTI, we didn't quite get there. Now, we're short on WTI, and looking for a move down into that level. You can see we didn't reach the bottom on WTI, but on Brent crude, we reached that low and we pierced it and bounced back. So is this going to carry on moving down from next week straight away, or do we need to recover and retrace a bit? I don't know. I generally am pretty bearish on WTI. My target, as you know, if you've been watching these videos for some time, is down here at the bottom of this longer term channel, and that's at about $58. We're currently trading at 78, so $20 lower, 79 actually. I don't know, is it 78, 79? No, 74. So quite a lot down below where we are. We're trading at 74, and this is at 58, the bottom of that channel. That's my target. I could be completely wrong. It might take a lot of time. It might go very fast. I don't know. But that's generally my strategy, and every rally will add to those shorts. And every dip, significant dips, when we get oversold, we take a bit of profit, bank that, and wait for that bounce and sort of recovery of the oversold position to resell into. So that's WTI, short on that, long on natural gas. Often they trade in different directions. For those of you saying, well, energy is energy and it all goes the same way. No, it doesn't. Natural gas often goes a different direction to WTI because there are all sorts of other variables involved in both of these. And because of those variables, there's a very small, insignificant almost, but slightly there, negative correlation between the two. So inverse correlation, if you will. URA and UEC collapsing down. I thought URA, these are the uranium twins, I thought URA would actually hold at the bottom of this loop that I drew in myself. We've gone a little bit lower. I'm not too worried. This got overbought, over FOMO'd. We've had a decent rally. We bought at these areas here. We took profits at the top, and we're long again now and looking to buy next week when we get the chance at the market open. The market only opens for me on URA and UEC at the US market opening, or the market open on Monday. So that's a long time from now, about 24 hours actually. So a long time to wait. Same with UEC, and this one we added a little bit more at the bottom of this channel, and then I circled that, as you can see, and so we took some more on our long position. We've got some from over there as well, but we've broken down through that support. This is not a full position by any sense of the word. We've got still plenty of space to add, and the lower and the deeper that UEC and URA get, the more inclined I am to buy. Very much like natural gas. And WTI is the inverse of that. So no worries with this. I'm actually quite pleased. We'll be looking to pick up some bargains on URA and UEC. All right. Now, let's go across to Bitcoin. This is the worrying one for me because I've got a decent sized position on this. It's just moving into negative territory now. We've been in profit this whole time, and we bought at around about 60,000. We've just dropped down there now to 59 and a bit. Now, I don't like the way this is moving. However, we have not invalidated this move up just yet. We've still got this broad, long-term bull flag, really. It's very shallow. It's more like a rectangle. It's more across the page than it is angled. But let's call it a flag for what it is. Technically, it's a flag, even though it's very shallow. And we're still in the middle of that flag. We're nowhere near the bottom, and we're nowhere near the top. I don't like this move down, but I'm happy to purchase some more Bitcoin a little bit low down. We've been taking profit at these tops consistently, so we'll be buying the bottoms of this, what you might now consider to be just a range. If we break out of this range and down below this spike low, and that is at $53,000 and some change, and probably get down in, I think, below 50, that's when I'll really start getting worried about Bitcoin. For now, still long, still got a decent position. We've taken quite a lot of profits on this over the last number of months. We've sold the rallies right at the top. We bought further dips. We sold the rallies, bought at the top. It's a range. We're trading it like a range. If you know how to range trade, this is perfect for you. You get in at the bottom, you exit at the top, take your profit at the top. Get in at the bottom, take your profit at the top. And now we're hoping that this is going to get to the bottom. We can buy some more, and that it'll hold that bottom and then begin to move up. So that's the general strategy on Bitcoin. Target about $100,000, maybe $104,000. Gold, well, we took cognizant of the fact that this rally actually failed here at the top of this long-term channel trend line, and we got out of our gold long position. I'm actually hedged. I've got equal positions long and short on gold. I prefer to do that on gold. My general idea and bias is long, but we can get very, very sharp and dramatic dips on gold, and we like to form double tops and triple tops and double bottoms and triple bottoms. Right now we've got a potential sort of double top, so that normally means gold could pull back quite a lot. So I'm now hedged for all intents and purposes out of the market on gold. Be looking to buy dips again. I'm still bullish on gold up to about 2,500. Didn't quite get there. We almost got there. We got to 2,480. If we can get to 2.5 to 2,7 to 2,8, maybe $3,000, maybe 3,2. I think that's stretching it a bit. We'll be looking to exit all longs and then stand aside. But for now, we don't have any position on waiting for that to drop down a little bit further. Nothing on copper. Oh, sorry, I'm incorrect. I was thinking about silver. We have a long position on copper, as my followers will know, on Twitter and on YouTube and in my private group. We're long over there. Talking about my private group on Twitter and X and YouTube, I'd love it if you wouldn't mind subscribing to this video and to this channel. Give the video a thumbs up, subscribe to the channel, and that'll really help the channel. I really appreciate that. It doesn't cost you a penny. It'll cost you 1 second of your time. So we're aiming for there on copper, the top of this sort of ABC, which may or may not happen. Ultimately, I'd like to buy some more copper, mostly in that region, but we have a small position currently at the moment. We may, if we do get a rally, and it looks like we try to bounce on Friday, we may get a rally back up to the 20-period moving average and this downward sloping Elliott trend line, this B to C line that I drew in myself. But it also happens to be with the 20-period moving averages, so we might have to move up there, touch that, and then eventually fall back into this big blob where I'm looking to buy a little bit more and probably a little bit more size on that too on copper. And then, so we've talked about gold. Silver, I don't have any, I very seldom trade silver, so I don't have any positions on that or anything. Let's have a look at it very briefly. I'll tell you what I think silver might do. I think if gold's going to come off and copper's sort of, trying to get going, but not really that sort of strongly, I think in that event, we could see silver coming off. My target's generally on silver to buy, if I'm going to consider buying, at 23 and at 25. These are these two blocks that I got drawn in pink and green. The 200-period moving average on the day chart on silver, this is the Pepperstone price, is at 25.99. But I think we could pierce that, get down to about 25 and 25.2, something like that, maybe 25. We've got some previous highs here. We've got a swing low there. So that's a good swing around zone. Previous high, previous low. Resistance became support. Will it become support again? Probably. That will now be considered the retest of that breakout. We broke out over there, retested it. Do we have to retest it again? Possibly. If we do retest it, perhaps we can get a double bottom off that 25 level. Failing that, we've got to get back down to the green block, and that's at about 23, and then we'll be right back into that traffic that was there for years and years and years, and it'll be rather unpleasant. For that reason alone, I think the market, I'm using a sort of anthropomorphic term, will decide that it doesn't want to get down there and doesn't want to get caught up in that mess anymore. I'm talking about the people in the market, and we'll probably try and hold above this red block. We'll wait and see. We'll play this by price action, see how the price action looks if and when we get down there. If you're long on silver and you've got your sizing's sufficiently small, you might want to consider adding into those levels around 25, 26, and maybe 23 if we have to get down there. Right, now going across the stocks, we're fully hedged on NASDAQ. We got out, we basically went short right at the top, and we fully hedged it. I'm not going to give you my exact positions now, but we've got a good chunk of profit locked in on the NASDAQ. The question is now, are we going to hold this channel bottom and this order block and the previous all-time high and this swing low that retested that all-time high? We've come back down to it again, quite dramatically, quite fast, but to me this looks like price magnet action, and price magnets will often experience a very powerful draw like this level has, down to that channel bottom, 2 days in a row, huge moves, 2, 3, 3.5%, whatever they were each day. So definite price magnet to that channel bottom, this previous all-time high, and the retest from this low. So we might see a very dramatic bounce on Monday or at the market opening, maybe even a gap up, I don't know, or a gap down. I think we could actually see a gap this weekend. We might have to get down to the 200 before a bounce. I don't know which way this is going to go. This is a crucial level on the NASDAQ, and I have got no bets on this at the moment, apart from the two positions, one long, one short, equally hedged, locking in that profit that we took on the shorts. So nothing else to say on that. S&P, on the other hand, has broken down through its channel, but it's not really a very sexy and neat channel such as the NASDAQ is. We've broken down a few days ago, actually quite a long time ago, weeks ago, and we stayed below. We retested that top of the channel, that downward sloping. This was a classic reversal trade to get in short. We didn't do it because it was NFP day and Fed day during this last week. So I could not get into a position there, not being able to trade after hours, and anything could have happened with the Fed, with the jobs number. NFP on Friday came out 114,000, maybe 104,000, one of those two. Very low number. We didn't know what that number was going to be or how the market would react. And we didn't know what Jerome Powell was going to say, whether the Fed was going to cut rates. We thought that, I was taking a silly bet on that. I thought they might, but incredibly unlikely. But we thought that Powell might just sort of waffle on like he normally did. But he very clearly said we could see an interest rate come up in September. And on top of that, he said what we're going to be looking at very closely is the unemployment number and jobs. And we'll see how that looks. If that looks very bad and dramatic and something gets out of kilter and it collapses, out of sight, then they'll get concerned. Well, very funnily, 2 days later on Friday, and that was this last Friday, that's exactly what happened. So the market has taken this as JP's wish came true. Now, so I couldn't get in there. This is a classic opportunity to sell, break down through the channel, retest. There's a 20-period moving average, downward sloping trend line, which wasn't there before, but it is now. 20-period moving average, underside of the channel, retest, back to the scene of the crime, breakout, pull back, sell. I spoke to my private members, I spoke to people on X that I communicate with, and I said, that's really what I want to do. I really, really want to take that trade, but I couldn't do it because of the risk associated with both the FOMC and the NFP. One four-letter acronym and one three. The threes are always the worst ones. Right, now, let's have a look at, so that's NASDAQ, S&P. NVIDIA, we've got a short position. That's just going to carry on moving down, hopefully, and we just remain short. There's our entries, one there and one there. You can have a look at that more closely if you want to. We've got nothing on Apple. Tesla might just hold support. We're looking to buy Apple and Tesla at some stage. And then Microsoft, I'm not trading Microsoft currently, but this has fallen down after the earnings report dramatically. Down to the 200-period moving average, though. For those of you who are softy bulls, this is the place you should be considering. Previous swing low, 200-period moving average, bottom of this order block. Pretty oversold overall. Maybe Monday we'll see Softy get a bit of a bid under its bottom, so to speak. Now, we've talked about currencies, we've talked about stocks, we've talked about gold, silver, and copper, and so on. We talked about Bitcoin, we talked about uranium, and we've talked about natural gas, Brent crude oil. Just going through these very quickly. The South African rand against the dollar and the pound, we're short on both of these. Those are entries. You can have a look at that. I've got fairly ambitious targets for these, about 16 and maybe lower on the dollar rand, and somewhere around 20 and maybe lower on the pound rand. That's what I'm thinking might happen. There are all sorts of political reasons for that and general feeling. I live in this country. I know what's going on. I know how things feel. I think I'm right on this one. Now, this is the 10-year yield, and I'm not going to go into a yield analysis and the yield curve analysis right now because it just isn't time, and I'm in Zanzibar and I don't even know how this video sounds. But look where we've got to, and I said this is what we were going to do. I thought we would bounce a little bit first and then move down. We didn't even get that bounce, and we just fell through the floor at absolute collapse in the 10-year yield. Only down to support, though. Now, if I zoom this out on a weekly chart, we didn't get short, by the way. There it is. We're still right at the top, and we're still right at support, and we could go an awful long way lower on this 10-year yield. I would look to play this with this plan in mind. I would like to sell this now that we've moved down. We're way too late, but there's still because I was waiting for this rebound and then the sell-off. Everyone was saying to me on X, this is never going to sell off. This is going up. That's why I was waiting for this rebound, not because of them, but because I had the same idea. Rebound to the 200 and the 50 period moving averages, this previous swing high and so on, previous swing high to the left there as well. Looking for a rebound to there to watch the reaction to resell. We didn't manage to get that rebound. That would have been a fantastic, brilliant trade, very similar to that one that we saw in the S&P, the breakout, pullback, sell, like the S&P. But we didn't get the pullback up to the top of that sort of red line and the moving averages, and we just collapsed down. So we might still get that. We've got two areas that we can look at now for a pullback on the 10-year yield. The underside of the channel that we've broken out of. So that's the breakout, looking for a pullback. Perhaps I can draw that for you. In fact, so maybe I can move this line down because it's no longer needed. So something like that. All right. Breakout, let's do it like that. So something like that. Just to the underside of that channel. But the other alternative is that we could actually have a fairly significant pullback, and we could sort of go something like that and then move down, and perhaps before moving down, bounce off that channel again. So basically a break back into the channel, perhaps to the channel center line, faffing around inside the channel, back to the channel bottom, bit of a bounce. Depends how this all works out, whether we're going to be kind of range bound and choppy, or whether we're just going to see massive gargantuan moves across the page on all of these things. So those are the two options on the 10-year yield, something like that. That's what I'll be looking for, and looking to sell that. And I think that's got a good chance of moving quite dramatically lower as interest rates now start to come down. I think we will see an interest rate cut in September, and I think there's even a chance, I'm not saying this, but others are saying that we might get an emergency cut this month. I think that's very unlikely. We don't want, and certainly JP doesn't want panic in these markets right now with everything that's going on, and with two wars going on, and with election turmoil and all that sort of thing. And the market's looking a little bit scary right now, or scared. Sorry about this. This is my hardware that I have to bring with me to, that I brought with me to Zanzibar. So I don't think that JP actually wants panic in this market. I think that's the last thing he wants. So I don't think we're going to see an emergency rate cut, but others do think that's a possibility. Going across to commodities, not much to say. There wasn't a lot of movement last week. Corn came off a bit. We're hedged on corn. We're hedged on cotton. So those are just idling along. We'll see. We'll deal with those later. Sugar we're long on, and we're probably going to get hedged on sugar as well. We're still in a little bit of profit on sugar. We've got no position on the cocoa, soybeans, wheat. Looking to wheat. We've got a long position on wheat at the green arrow. Actually, that moved into some profit on Friday. Just poking into profit, just up to the 20-period moving average. And then coffee, I'm looking to get short, but not at this level. Cocoa, I'm looking to get short, but not at this level. You can have a look at this chart, something like that. If you zoom that in on your YouTube, press the button on your YouTube screen, make this video bigger and zoom in. No, I'll do it for you. Why not? All right. I'd be interested from you folks as well. If you haven't subscribed and liked the video, please do so. But I'd be interested to hear from you if you like this more relaxed style, no editing, just talking randomly off, as I see things. I haven't done any prep for this. I'm telling you what I've, my trading from Friday. It's now Sunday. I've been on Zanzibar time for 2 days, so I'm just ad-libbing really as I see things. So maybe it's more relaxed and casual and more interesting for viewers. Let me know in the comments below. That would be great. And anything else you'd like to hear about, please put in the comments too. All right, so I think that's it, folks. Let's go back to natural gas for one last look, because I know that everyone's really interested in this. See if we can find something else. Let's have a look at the natural gas futures. This is the Henry Hub price over at BlackBull. But let's see if there's anything else on here. Let's have a look at, let's go through the shorter time frames. Look at that 15-minute chart, very beautiful, V-shaped recovery. We always like to see that on any instrument, and normally that will continue. Normally, that's the 15-minute chart though, so it's not really significant in terms of the way I trade. I'm a swing trader. But on the hour chart, same thing. We've got a bullish engulfing candle and a piercing pattern in the same candle. That's incredibly bullish. That's the 1 hour chart on natural gas, Henry Hub futures. Let's go to the 4-hour chart. It also looks good. And we've got this big spike low, spiking back to that heavily defended region that was being defended time and time again when there was options rollover, and there was also futures rollover within a day or two of each other. And that level was being defended. It's now back above that level. That spike down there, as you know, going back to the 15-minute chart, took literally, I don't know, 2 hours down, 2 hours up, 1 4-hour candle, down, up, and we're back where we were before we started that journey. So yeah, I like it. I think it looks good. However, I would like to add some more if we get a chance. I don't think we're going to personally, but maybe we will. Who knows? A lot of people are very bearish on natural gas. Remember, we're at the dollar. We're actually in the dollar store now. We're below $2. We're in the bargain basement. We come out. We're in the bargain. We're in the cheapest part of natural gas. Anything below $2 is cheap. Below $1.50 or thereabouts, which we did have this year, is for nothing. It's mahala. It's free. Almost. So below $2, it's time to be buying natural gas. We trade natural gas from $2 roughly and below, but doesn't really go much below, up to about $4, $3.50, $4. That's the range in general. And on occasion, we get out of that range rather dramatically, but it only happens every couple of years. So we're trading $2 to $4 in general, or let's call it $3.50. Let's not get too optimistic. All right, that's it, folks. Have a wonderful evening. I'll check in with my private group, perhaps on X. If you're not following me on X, I will be putting some commentary up on X at midnight my time tonight, which is when markets open, and natural gas will gap up, gap down, or do nothing. And I will be online and watching from Zanzibar, and I will be on X and in my private group. Take care. Speak to you soon.
Trading in the island sun, Zanzibar's where deals are done. Forex moves with the tides, stocks rise just like the pride. Commodities we trade with